Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Wednesday, August 23rd, 2017. Happy hump day everyone. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. The previous session we talked about the last couple of days. I mentioned if bulls are looking or eager to buy, this is the best location right now, is being below 2430 and finding signs of rejection. Remember, we needed to get above 2430 in order to start pushing higher, and through 2440 to really start pushing this thing beyond the previous pivot high. It became a stop run day beyond that level and a major continuation higher. I mentioned before, if price can push through 2440, you have 2459, 64, and 74 as the next upside targets to strive for. The market rejected the previous week's low and the previous week's close, and it's now rallying, and that usually opens the door to a move back toward the previous week's high. So again, we could be looking at a continuation back toward 59, 64, and 74. Right now, 2440 becomes the very important key level here that bulls need to defend on this pullback. So after a high range day like this, you typically see a failed new high and you see a return back toward the midpoint. That's what we're seeing now. That's the short-term response trade. And then from here, bulls want to defend 2440 and especially 2436 in order to get this thing squeezing back toward 2473. So right now, still short-term squeezing up. Still have a rounded behavior here, but we're in an uptrending market. At some point, this thing could really unwind itself to the upside and begin another trending move. So keep an eye on 2440. Here's a look at crude oil. Now, crude has been significantly coiled up here recently. We had a couple of days, one big up, one big down, but for the most part, we've been kind of just really tightly coiled in here. As a matter of fact, right now there's a 25 tick range. Obviously today is Wednesday, so we have EIA report later on, 9:30 Central, but 25 ticks a range is just significantly tiny. And we've been averaging $1.29 of range a day, so that's only 19% of ADR. So at some point here, we're going to see a breakout from this range, which could be significant. This is an inside day here, another inside day, and another inside day. We're working on a multiple inside day scenario here, but we're chopping around VPOC, and that's the tough part. When you're chopping around VPOC back and forth, there's really no edge, but at some point we could see a significant move. I talked in our trading room about the fact that price continues to hold near the upper boundary of this channel, but is not able to really see strength carry through that upper line. So the expectation may be a hold here below 49s, suggests a return back toward 44s. So that's going to be something we'll be watching out for here as we head into the EIA report later on. Lastly, let's take a look here at gold. Here's gold, again, rejection signature right there. We talked about the rejection at the previous highs. We talked about the absorption that can occur between 98 and 1300, and that's currently what's happening right now. Again, very similar to some of these others, we have inside day scenarios, very narrow. This is what you want to see if you're a bear, defending 98 to 1300. You want to see this, you want to see several days here, but now by the third day, you want to start seeing this thing hit new lows. Above 1300 will squeeze yet again, and these bears are going to have to basically cover their trades and look to re-enter again. But right now, this is the best first opportunity to look to enter and reject 98 to 1300 doing this deal, but it needs to stay rejected. Any failure to hold above 1300 could lead to a stop run against the range. So right now, still developing, very close to seeing a result here of either a continuation or a return back toward 1250 or a continuation higher. So keep an eye on this area right here. We also have the NQ, and the NQ right now, we talked about this one before. This Monday low took out the previous week's low and the low from 2 weeks ago, and you can see subsequently we saw this thing shoot up. We've had this kind of sloping range here that's been developing. Every time price squeezes, we get back to about 59.07, 59.13. That's about the zone that we were looking for on this squeeze. Once we get there, though, really has to power through 59.50. Remember, above 59.50 can squeeze. Failure to do that just kind of locks price in between 57.30 and 50 and 6,000. That's kind of the range right now, and best odds are at fading the edges back up, fading the edges back down until proven otherwise. So right now, flowing back up, very similar to the ES, a pullback here toward the midpoint of the previous session's range could provide an opportunity to squeeze it up. Failure to hold that level leads to more chop in the range. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck, trade well, and I'll see you soon.